Welcome back. You're still tuned into Halftime Report. Let's get to another company now. Greenlam Industries slips in trade after reporting what was a mixed set of numbers. The pace of revenue growth has declined and the profitability slipped on account of higher depreciation, but the margins expanded in Q3. To discuss this and more, we have Saurabh Mittal, who is the MD and CEO of the company, joining in. Mr. Mittal, hi. Thank you very much for taking the time out. If you could just start by discussing your largest segment, laminates. You did around a 12% growth on a blended basis. But laminates, you were up around 8.8%. What was the volume and realization growth within the segment, and what can you guide for?
Right. So if you look at the laminate segment in last quarter, we actually had our highest production, and challenges were on the exports, sales, booking and closure, because we had a lot of materials in the water and at the ports and at the factories which were pending for containers, availability of our vessel delays, of our vessels reaching the destination because of the detour they had to take because of the Red Sea problem. So really, I think that's where the laminates business on revenues and production was. The domestic business grew well last year considering the market situations. Gross margin expanded, EBITDA margin expanded. We also had about 225 to 250 crores of capitalization of the new laminate plant, which we started on the 29th of September. So actually, if you would remove the capitalization and the initial losses of the new laminate plant, EBITDA margins look far superior. So really, I think you could not see the impact of the work done on ground, and we believe we've taken more market share on ground in both domestic and the international markets.
That's incredible. So let's tell the street then what the benefit of these things that you've done on the ground would be. First up, export mix was close around 45 to 50%, if I remember correctly. Export realizations were a bit of a drag. So where is that mix and realization likely to be going forward? And this quarter, you did a volume growth of about 9% in your laminates business. With new capacities coming in, increased capacity utilization, what is this number likely to look like in FY25?
So on the realization, our realizations on a blended basis are nearly the same similar as Q2 of FY24 and Q3 of FY23. So despite the challenges, we've had a lot of pricing discipline. We've worked on value mix improvement. We also had a Gujarat factory up and running, which is more in the commodity segment, despite the fact of that capacity is getting streamlined in realization. So I think if you look at Q4 or ahead, now our capacity utilization with the increased capacity is slightly above 80%. And so in the past, we have done 95-100% utilization. So I think as we move ahead, utilization should improve, revenue should improve, the EBITDA losses from the new plants should reduce. So I think we should be able to maintain a good momentum in the business as we move ahead.
Okay, all right. What about your total FY24 revenue guidance? At one point you were targeting around 20%. You've closed in around at 12 to 13 odd percent.
Correct.
So it seems to, what would FY24 exit run rate look like? And FY25, your earlier guidance was 20 to 25%. So on both of these.
Yeah. So if you see FY24, clearly we are slightly behind the broad plans we had due to the challenges which are known. So my guess is FY24 we probably close at around 15 odd percent, and for FY25 I think will be somewhere in the vicinity of 20%, because we have these new capacities which will get into production and get streamlined. So this year we have started a third production line in Gujarat factory, like I said. We started a plywood plant in Tamil Nadu. We started a laminate plant in Andhra Pradesh. And in the coming financial year, we'll start the particle board line in Andhra Pradesh again. So I think all these capacities will keep getting ramped up. So I think next year we should be looking at a 20%, somewhere in the vicinity of 20%. As we see things now, if things change for the worse or better, obviously situation could change, but clearly that's where we think we should be.
All right. And what about your veneer performance and your plywood business? So veneer, you had kept saying that you will break even. Break even you have 0.4 crore is the EBIT that you put. On a sustainable basis, what is the kind of operational performance that one can pencil in here? And even on your plywood business, how long will you invest in this, and at what scale does typical break even happen?
Right. So if you look at the veneer business last quarter, on an overall basis with the veneer flooring and doors, from EBITDA loss, we have come to EBITDA profit. And I think we'll keep maintaining we'll keep improving this part of our business as we move ahead, because this business, we don't need to put any further capital, and with the revenue increase and raw material costs more or less under control, we should, keep improving the profitability and the revenue in this segment. As far as the plywood business is concerned, I think the factory is quite well settled. The product quality, has been well accepted in the market. And as we move ahead, I think revenues will keep going up and the losses will keep reducing. So hopefully in the next 2 to 3 quarters, we should we'll see more improvements in the ply business. We've said this earlier in FY26, in FY26 we expect to break even, or come to full capacity, not break even actually, in FY26 in the ply business. And at about 55-60% utilization, we should break even in the plywood business.
All right. What would your full capacity revenue on plywood business look like?
It'll be close to about 400 crores in plywood.
Thanks. All right. Thank you, Saurabh, for joining in. Wish you good luck for the remainder of this year. More importantly, for all of next year as well. That's when the capex kicker comes in, and the year after that, where plywood starts to scale up in its utilization too. With that, we'll step into a short